Hello ladies and gentlemen, welcome to A1 Money. My name's JJ. I talk all things finance, so let's dive right in. Value-added tax, VAT, is a widely used system of indirect taxation implemented in approximately 140 countries worldwide. In this video, we will provide a thorough tutorial on VAT, covering its basic concept, how it works, and an overview of different VAT categories. Whether you're a business owner, a consumer, or simply curious about taxation systems, this video will help you grasp the essentials of VAT. Basics of a VAT system. VAT is an indirect tax imposed on the sale of goods and services to final consumers. It is essentially a tax on consumption. The collection of VAT occurs in stages through a process known as the chain of supply. VAT-registered businesses charge VAT on their sales, referred to as output tax, and reclaim VAT on their purchases and expenses, known as input tax. The difference between output tax and input tax is settled with the country's tax authorities. It's important to note that VAT is not a cost to businesses themselves. Rather, they collect and pay it on behalf of the government. VAT example. To better understand how VAT works, let's consider an example with numerical values. We will follow the journey of a product through various stages of the supply chain, with each participant adding value and charging VAT accordingly. Imagine a scenario where a producer collects seashells, sells them to a jeweler or manufacturer, who then sells the finished jewelry to a distributor, and finally, the retailer sells the jewelry to consumers. Here's how the VAT would be calculated at each stage. 1. Producer sells shells to manufacturer. Invoice amount, £100. VAT charged, £20. Total invoice, £120 to manufacturer sells jewelry to distributor. Invoice amount, £200. VAT charged, £40. Total invoice, £240 3. Distributor sells jewelry to retailer. Invoice amount, £300. VAT charged, £60. Total invoice, £360 4. Retailer sells jewelry to consumers. Invoice amount, £400. VAT charged, £80. Total invoice, £480. The VAT collection process works as follows. Producer, charged £20 output VAT, with no input VAT, settles £20 with the government. Manufacturer, charged £40 output VAT, and has £20 input VAT, pays a net amount of £20 to the government. Distributor, charged £60 output VAT, and has £40 input VAT, pays a net amount of £20 to the government. Retailer, charged £80 output VAT and has £60 input VAT, pays a net amount of £20 to the government. In this example, each step of the VAT collection amounts to £20, resulting in a total VAT of £80. Ultimately, the burden of VAT falls on consumers, as they bear the £80 embedded in the final retail price of £480. VAT categories and rates. VAT categories and rates may vary between countries. Let's take the United Kingdom as an example to explore its VAT structure. 1. Standard rate. The majority of goods and services fall under this category, with a standard VAT rate of 20%. 2. Reduced rate. Certain items, such as children's car seats and home energy, enjoy a reduced VAT rate of 5%. 3. Zero rate. Most foods and children's clothes are taxable, but at a rate of 0%. This means that VAT is charged at 0%, but businesses can reclaim VAT on their purchases. 4. Exempt. Some services, including medical, financial, and postal services, are exempt from VAT. 5. Out of scope. Transactions such as donations to charity or tolls for public roads are not subject to VAT. It's worth noting that while the European Union (EU) has standardized many aspects of VAT legislation across member states, standard rates and categorizations can differ between countries. Reverse charge VAT. In the context of cross-border transactions, particularly within the EU, VAT can be a complex matter. For instance, a training company based in the Netherlands delivering services in other EU countries may wonder how to handle VAT obligations. The general rule states that, when providing business-to-business services between two VAT-registered entrepreneurs within the EU, the VAT is applied in the country where the recipient of the services is established. However, this doesn't necessarily require the training company to register for VAT in all EU countries where it operates. The solution in such cases is known as reverse charge VAT. Under this mechanism, the invoice itself does not include VAT. Instead, the recipient of the invoice self-assesses and deducts the local country VAT in their VAT filings. This leads to a VAT charge of zero, but with two separate line items for clarity. Both the supplier and customer report the transaction separately, providing details of the counterpart's VAT number and amount. By implementing the reverse charge mechanism, the administrative burden for companies involved in cross-border transactions is greatly simplified. So VAT, or value-added tax, is a prevalent system of indirect taxation used in numerous countries worldwide. This video has provided an in-depth tutorial on the concept and workings of VAT, utilizing a practical example to demonstrate VAT calculations. We also explored different VAT categories and rates, with the UK serving as an example, and discussed how VAT functions in an international context through the reverse charge mechanism. Understanding VAT is crucial for both businesses and consumers to navigate the complexities of taxation systems and comprehend the impact on the economy as a whole. So that's the video. Hope it was helpful. If it was, then subscribe, give it a like, and let me know your thoughts in the comments section below. Check out this video that's on screen now and catch you in the next one.